Hey guys, this is Vu here. So you want to know a little secret about investing? For most people, especially for most retail investors, they actually tend to underperform against the S&P 500. This is based off of research and anecdotal evidence from a lot of my friends. And it actually makes sense why. So whenever people invest with their own money, they tend to be very emotional. So people tend to be bullish. And so when the stock market jumps up, especially jumps up a lot, they get the FOMO and they tend to buy, and they tend to buy at higher prices than normal. And when the stock market drops, especially dropping very hard, a lot of people let their emotions take over and they tend to sell. So that's why for most people, holding the S&P 500 or the equivalent, which is VOO, VOO, the ticker is VOO and is equivalent to the S&P 500, it's a sound strategy. But one of the things that I've been thinking about is, what if you just don't want to buy and hold? What if you have a very simple strategy to buy and sell the S&P? Can it outperform the buy and hold strategy? So let's take a look right now. One of the things that I recently did was I did a relatively simple grid search of this S&P 500 within the past 30 years. So what if we implemented this buy and sell strategy? So let's say if it drops 2%, then you buy. And if it jumps up 4 to 5%, you sell. Is that a viable strategy? Would that outperform the S&P 500? So in here, we could kind of take a simple look at what I just said. So if we do our strategy, which is in the orange, we actually outperform the S&P 500 if we hold it for 30 years. So remember, initial cash was $10,000. So after 30 years, it's about $175,000, $180,000 if you buy and hold, versus if you sell, if you do the strategy, it's about $230,000. So you actually outperform it. Now, let's take this a step further and say, what strategy would actually outperform buy and hold the most? So we're going to do a grid search. And the grid search is basically looking at all the values with this strategy and seeing which one does the best. And so I did that right now. And so the strategy is between 7%, negative 7% to 7%. If it drops 7%, you can buy or sell. And if it increases 7%, you can either buy or sell. And so all the areas in green, especially dark green, are good strategies. And with a little green over here as well. And I can kind of suspect why, and we'll talk about it. So this strategy over here, if you look at where the darkest greens are, you kind of see it's around, the sell percentage is around 3 to 4%, and the buy percentage is between negative 2% and 1%. And so this dark green part right here is buy whenever the stock market drops 0%, so it doesn't drop at all, and sell whenever it jumps 3% within 1 day. And the darkest green right here is whenever it drops 2% per day, then buy. And whenever it jumps up 4%, that's when you sell. And so this third one right here is when it drops 1%, buy. Whenever it jumps up 3%, sell. So all these events are relatively rare events. So between 2.5 to 3.3 sigma, which means that it probably only occurs about 1 to like 5% of the time. Actually, less than 1%. The time 3.3 sigma is about 0.5%, so pretty rare event. But whenever you see it jump up by 4%, which is a very rare event per day, then you should sell. So these three strategies seem to be the strategies that give you the best returns. And so let's take a look at the charts right now. So I actually graph the charts right here, and up this red right here is the buy and hold strategy. Let's expand the chart. So this black right here is the buy and hold strategy, excuse me. And this red up here is the strategy of buying whenever there is a 0% drop and selling whenever the stock market is up 3%. And if you look at this buy streak, that means that if 0% for 2 days in a row, then you should buy. And the sell streak means that if it's up 3% just for 1 day, then you should sell. And that seems to be the top performing strategy. And the other strategies, if it drops 2% for 1 day, then buy. If it jumps up 4% within a day, then you should sell. And so for me, if you compare it to like the bottom 80, bottom few hundred, this is actually the bottom 300 strategies, they don't do too well. And so it seems like this is a pretty good strategy. And so one of the things I want to note is if you look at the data, I did a grid search of about 900 strategies, and only 83 of them managed to outperform the buy and hold strategy. So, which kind of leads me back to the point that for most people, this buy and hold strategy works pretty well. But if you want to kick it up a notch and get an ROI that might be about 50 to 100% higher, then you can implement these very simple strategies. So if you thought that was pretty helpful, pretty insightful, I'd appreciate a like and subscribe. Again, I'm not a financial advisor. This is not financial advice. This is just what I've seen within the data. And so implement it or not, I'm not going to encourage you to do it, but I just thought this was very insightful. All right, guys, have a good day. Bye.